Isn't the ultimate goal of using the Kraken API to just make money while you sleep? Let's be honest, that's what we're all here for. After diving deep into Kraken's API and spending countless hours coding, testing, and debugging, I've seen exactly what works and what simply wastes time. The best scripts aren't always the most complex, they're the ones that execute a proven strategy reliably and efficiently. I've narrowed down the most effective automation scripts into 3 core categories that consistently outperform other methods. 1. The DCA Rebalancer script. The first, and arguably the safest for a consistent portfolio, is a dollar-cost averaging rebalancer. The goal: maintain a specific percentage allocation across your portfolio, say, 60% Bitcoin, 30% Ethereum, 10% cash. The scripts function: this is a private endpoint script that periodically checks your current balances via the /0/private/balance endpoint. It calculates the deviation from your target percentages. If Bitcoin drops, your allocation is too low, the script executes a market or limit by using the /0/private/add order endpoint to bring it back to 60%. If your ETH goes too high, it sells the surplus. Why it's effective: it forces automated discipline. You buy low and sell high automatically without emotional interference, continuously bringing your portfolio back into balance. It's a low-frequency script, meaning it avoids rate limit issues while still capitalizing on volatility. 2. The Simple Momentum Scalper. For those who want higher frequency and are comfortable with more risk, the Simple Momentum Scalper is your best bet. The goal: capture small price movements within a tight window, usually based on a technical indicator like a fast-moving average crossover. The scripts function: this script relies heavily on the WebSockets API for real-time data, specifically the OLK or ticker feeds. Using Python libraries like CCXT or Kraken's SDK simplifies the data retrieval. The logic is simple: when the 10-period exponential moving average crosses above the 20-period EMA, it's a buy signal. When it crosses below, it's a sell. It then places a small, fast limit or market order. The key to success: you must implement robust rate limit handling and fast execution. Kraken's private API has limits, and frequent trading can hit those quickly, resulting in errors. A well-designed script will use a queue system or a throttling mechanism to prevent this. Fast response to the market via WebSockets is critical to minimizing slippage. 3. The Liquidity Monitor. The final script isn't about placing trades, it's about data aggregation and signal generation. The goal: identify market inefficiency or sudden shifts in liquidity before a large move occurs. The scripts function: this script uses the public/0/public/depth endpoint to grab the top of the order book for multiple pairs. It calculates a simple metric, the ratio of total by volume, bids, versus total sell volume, asks, within a specific price range. A sudden, massive imbalance, for example, a 5x larger buy wall appearing on the book, acts as a strong signal. Why it's invaluable: this is a back-end monitoring script. It doesn't trade itself but feeds its signal to your other trading scripts or, crucially, directly to you via an alert, like a Telegram bot integration. It turns raw market data into an actionable signal, providing a fundamental edge. Final thoughts on implementation. Regardless of which script you choose, remember 2 non-negotiable points. Security: your API keys must be managed securely, read-only for public data scripts, and for trading scripts, only enable the minimum required permissions. Never hardcode them. Use environment variables. Error handling: crypto markets are volatile, and network conditions change. Every request should be wrapped in try/except blocks to handle API errors, timeouts, and connection issues gracefully, ensuring your bot doesn't crash and leave an open position unmanaged. With that said, thanks for watching, and until next time.